Good morning. Welcome everyone to Admiral Markets webinar. Today's focus is on patterns, chart patterns, and we're going to take a look at the charts to see what kind of material we can find. All right, and the setups. First of all, though, be aware that this webinar is shown to a global audience, may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity, to find out more about that and other details. Also, please be aware that trading for exchange and global financial markets is considered high risk, may also not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with its disclaimer, and you are also aware of the risk involved when trading. Regarding the calendar today, we have basically ZEW Economic Sentiment Index. We got some medium news, some green news, as you can see. New home sales is red tagged on the dollar, and that's basically the list for today. Nothing very spectacular, but always, of course, be aware of the news events that are going to be appearing today. Heat map, we can see Apple, for instance, in the green, Pound Odd in the green. Microsoft and Facebook had some down days. Regarding the currency pairs, we see a lot of pairs around that 0%. That means that they open and close at the same level. And that's pretty typical, pretty common for Mondays, right? Mondays are usually slower. And the Tuesday, Wednesday, Thursday, the market does heat up a bit more. And then Friday, it slows down again. The beginning and the end of the week are typically, on average, slower. In my experience, at least, Tuesday, Wednesday, Thursday have a lot more movement, and it typically have a couple of sessions that have some good movement. Not every session necessarily, but you're going to find a couple of those big movements in these sessions most of the time on these 3 days. That's like everything in Forex, actually, in my opinion. The first and the last is a bit more difficult. The first day of the month, the last day of the month, the first week of the year, the last week of the year, the last day of the quarter, the first day of the quarter, etc. So it's not so untypical. We have a couple of pairs here at the bottom near 1%, and as you can see, all of those are yen pairs. So most of the movement actually coming from the yen, and not so much from the other pairs. And we might see that here. Let's see, the yen is actually, interesting enough, not that high, but I guess the cross has moved against the yen, but the yen apparently not itself. It's strange. Anyhow, New Zealand was the biggest mover so far. All right, let's take a look at the charts now. And take a look at some chart patterns. We'll analyze the majors, start with the Eurodollar as always. But specifically with keeping an eye on chart patterns. Chart patterns, of course, something that is or needs to be trained. It's trainable. And the more we look and find patterns, the better we become at it. And eventually it'll become a second nature. We'll see them quite quickly. And at the beginning, that might take some time. I mean, certain patterns are not as visible, might need a bit of practice, right? Actually, I would say you need to really go probably back into the past and just practice this as a training, right? That's always the best. Go back in the past, look at charts from a year ago, half a year ago, it doesn't really matter, and just start drawing those patterns on the chart. That's the best way to learn patterns. First, of course, we need to know the theory of patterns. Like bull flag is an example of a pattern. A bear flag is an example of a pattern. And once we have that in mind, we go back into the chart and start drawing them. And that's the best way to really imprint the theory into practice in a way, just to really have it down pat, really have it very, very kind of entrenched in our brain that we recognize those patterns quickly. The only way we do that is by literally drawing them on a chart, dozens of times, preferably even hundreds eventually, right? Just to give a quick example here, right? This could be maybe a bull flag. Now, I wouldn't consider that to really be a good bull flag. It's maybe more of a rising wedge, in fact, because why? Because falling wedge, sorry. Because of the fact that we have a resistance line that is a steeper angle than the support line, as you can see. All right, that's typical for a falling wedge like this. A bull flag I would consider this level here, this pattern here, sorry. Here we go. Could also be a falling wedge, by the way. Sometimes they are similar. This is more of a falling wedge, actually. Like this, when you connect the dots. But I would like to show you a bull and bear flag, because I just use that as an example. This is the hourly chart, pound dollar. Well, even a pattern like this, it's a big one, right? But it is a flag pattern as well. Now it's quite big, but that's okay. Most importantly, though, with the bear and bull flag is that it doesn't correct very deep. It doesn't go past the 50 fib, because once it goes past the 50 fib, then I don't think it's a flag anymore. For instance, here you can see price stopping at the 38.2 fib. If we put a fib from the top to the bottom, you can see price stopping at the 38.2 fib. That's very common, 23.6, 38.2, even 50 fib. Those are all common fib, levels for bull flags and bear flags to stop. If it goes beyond that, I don't consider it a flag anymore. For instance, here you can see the price went to the 61.8 fib. I would not consider that a flag anymore, and would consider that a channel if it were to have a parallel lines here. Okay. Now in this case, this was a falling wedge, and that's fine. Falling wedges do not necessarily have to respect the higher fibs, right? Flags do, because flags are continuation patterns. Flags are consolidation patterns, pauses within a momentum. So when you have momentum, you get a flag. Typically, that's a continuation signal for more upside, right? That's why flags should not retrace deeply, because if they do, it doesn't signal the strength that it should have for the momentum correction kind of scenario to unfold. Momentum, correction, momentum. If the C part is too deep and goes too far against the first M, looks like math now, apologies for that, but I didn't want to make it a math class, but I'm just using letters for the moment. M1, if M1 is strong, but the C goes too far back against M1, it's not that impulsive as we would expect it. Okay, that's why we need shallow flags as a continuation signal. All right, with that general introduction in mind, let's take a look at the Eurodollar. We got the 4-hour chart here. We got a good downtrend channel on this 4-hour chart, and price is respecting this level, this resistance top a few times, and has approached it recently again. So that could be a continuation, a moment for price to continue to the downside. It actually broke yesterday already a bit, as you can see on the hourly chart. You can see this was a bear flag, very nice bear flag, right? And if we put a fib even from here to here, you can see it didn't break the 38.2 fib. So that bear flag broke, and there was a bit of downside, about 30 pips, but then it bounced off the bottom, basically creating a double bottom, and now price is still within that range. So to me, it's starting to look like a triangle. Yesterday was a bear flag. These purple lines indicating that bear flag. All right, but let me take that off. At this moment, I would say we can connect these bottoms here. That's a support trend line. We could connect these tops like this probably, and that's a resistance line. So that's a contracting triangle. Contracting triangle is where two lines are getting closer to each other. That means that the tops are getting lower and the bottoms are getting higher. All right, there it is. Now this contracting triangle, the orange, indicated by orange and green, is happening within the downtrend, right? Because we see the downtrend channel on the 4-hour chart very, very clearly. Downtrend channel indicated by the pink lines. And therefore, a break to the downside would be preferred considering the trend. If it does break to the upside, it's a reversal trade, it's a counter trend move, and hence a bit riskier. If it breaks to the downside, it's with the trend. There should be more momentum pushing price lower. So it should be easier for price to fall down than for price to go against the trend. Now, in this case, I would say that there's a potential for price to get down to around 111.30, perhaps 111, and then there could be a bit of a bounce because we do see a 272 target first of all, but more importantly actually is this support trend line here coming in on the daily. All right, that's a rough support zone at around 111, and that could cause price to make a bounce. So that's something we have to be aware of if trading to the downside. Be careful of this rough support region really, 111, 110, and then 109. So far, this basically this trend to the downside that we see here, right, occurred on or turned around at this daily resistance, this red zone. Just give me 1 second, folks. And let me put the fib on these time frames. All right, so the turnaround, this downtrend channel that we see on lower time frames, that started all back here where the daily had a big pin bar, and a pin bar occurred in this big resistance right here. This was a big resistance zone, big layer of resistance, okay? And that's where price turned around, and you can see the alligator. This is something that we want to, or I want to discuss tomorrow, is alligator and fib trading. So join our strategy webinar tomorrow, same time, 6:45 a.m. GMT time. I want to give you a bit of a glimpse already of this indicator on the euro and pound. I have it. And you can see that this alligator has already turned and twisted to the downside. They're bearishly aligned at the moment. But that has happened before, of course, and that still was a retracement here, for instance. So I think it is important how price responds to this trend line. All right, we got a light blue line coming in too, and that's basically connecting these bottoms, and that's acted as support. So let's see how price responds to that zone as well. That comes in around 111.75. So if 111.75 breaks, I think there's a good chance for price to fall down to 111.25, 111. Not a lot of space. We're talking about 50, 75 pips. So it's not a huge zone. So what does that mean? 50 to 75 pip space doesn't mean it's a swing trade. I would not take a swing trade. There's just not enough space to the downside there for me to take a swing trade, because if I would take an entry here and I put my stop loss all the way above here, it's less than 1-to-1 risk. A reward to risk ratio out of the question for me. So it would have to be, what I would have to see a break to the downside would mean if this triangle were to break later today or tomorrow, I would like to see probably an hour candle close below it like this with a decent strong close near the low. And I would look for a bit of a bear flag on the lower time frame, and then seek that continuation. Look back probably to the broken bottom right here, 11.75. Wait for that pullback to that level, and then I would look for shorts on probably the 15-minute chart. But the trigger is the hourly candle with a close below 111.75 with a close near the low. Once I have that, once the green light is given for the break of this triangle, I zoom into a lower time frame and I wait for the pattern after the pattern. What I mean with pattern after the pattern, I talked about this before, is you got a triangle here. That's let's say the big pattern. Actually, it's probably more of a 30-minute triangle. Here you can see the 30-minute triangle. Why? Because you can see the pattern on the majority of the chart. So if you can see, the pattern on the screen, you don't want to have the pattern that's so big that you can't see it, because then you're basically zoomed in too much. Let's take a look at the 5-minute chart. Okay, you'll see what I mean. Do we see the pattern here? Well, we see different patterns, but we don't see that triangle that we saw on the hourly chart. We don't see it there. So it's not a 5-minute pattern. But do we see it on the 30-minute chart? Yeah, we do. We see it pretty well. It's the majority of the chart, but it's not. We see everything. There's not a part hidden. So I think it's a 30-minute triangle. What that means is if the triangle breaks on a 30-minute chart, that means I'm going to zoom in to a lower time frame. Now, if it's a 30-minute chart, it's either going to be a 15 or 5-minute chart, probably a 5-minute in this case. So what happens is that once a 30-minute candle breaks below this green line. I zoom into the 5, all right, and I'm waiting for a bit of a pattern after the pattern. I'm waiting for kind of a bear flag like this, and then I'm taking that bear flag either as the bear flag takes it back to 111.75, and I see a bounce there, or I might take an entry order right there, not even waiting for any reaction, or the break of this bear flag, basically. So that's a bear flag on a 5-minute chart after the break. Now the reason for that is because when you get a break here, is that a false break? Is that a true break? And we never really know, to be honest. But if a bear flag appears after the break, the chances of a good breakout are drastically increasing. Whereas if you don't get a bear flag, but let's say this happens, get the break, but you see momentum quickly and swiftly moving like this, and then you see price consolidating. Well, I wouldn't be looking for shorts anymore. And I would probably consider that to be a very likely false break. So by waiting for the pattern after the pattern, we kind of like have an assurance, protect ourselves against these false breaks, and there's more confirmation. Sometimes it's worth it. Sometimes it's worth it to take the break immediately because there might not be a pattern. Well, there is always a pattern after the pattern, but it might take a long time. If there's really a good momentum, right? The risk of this is that it could push very far before you get some pattern. And maybe it's too late. It could be too late. And the break could have happened, and there's not going to be a continuation. That's the risk. But in this case, I'm not worried about that because support is so close. I'm not worried about missing this trade, and I'm not worried about if it were to happen and I'm not in it. I need that pullback. I need a break, pullback, continue, just because there's such a small space here that I'm not going to take that risk anyhow. Actually, I think because support is so close, I would expect that pattern to happen anyhow, to be honest, right? So now, how about the upside break? If the upside break happens, there could be a bigger correction. And in that case, let's see. You see, we got a good trend here looking at these alligators. Strong curve to the downside. Why? Because if there's no trend, the alligators go flat like here. There's a pause, right? They're still all pretty nicely spaced out. There's a decent space between these alligator lines. All right, so if there is a correction, let me think here for a second. Wait, hang on, let me grab my wave analysis. Sorry about that. Okay, let me go back. In any case, I'll check it. Maybe a bit slow at the moment. But anyhow, I wanted to take a look at the waves. I think if I remember correctly, let me think for a second. If I remember correctly, I'm not sure if it's this fib or this one. I think it's this one. Well, anyhow, I can keep both on. So if we get a triangle break to the upside, price will most likely go up to these fibs and turn. So most likely turning spots, and you can see there's a confluence actually already, is, let's see, there we go. The 61.8 and 38.2 fib at around 112.75. So if we get a break above these tops here, you can see around 112, what is it? 112.25. Break above 112.25. There's about 50 pips up to that resistance right there. Here too, I think I would need to see a 30-minute candle with a good close above 112.25. and I would need to see a bull flag and then a break. And this one is risky because it's counter trend. So this is um, maybe even better to skip. But those breakouts sometimes can happen of those channels, and you can see an expansion of a retracement. So it can happen. It's just riskier. All right. So that's the predominant pattern on the Eurodollar at the moment on the lower time frames. From a higher time frame perspective, it might be a ascending wedge. Now, forgive me for all these fibs here that I'll have to, let me take those off quickly. There we go. So this whole red zone is kind of like the top, and this pink line is support. So it's starting to look like a bit of a ascending wedge. But we should also keep in mind that the momentum prior to that ascending wedge was down, right? Normally speaking, you got up momentum, and then you get an ascending wedge like this, and that breaks the upside. Now this is different because you got down momentum, and then you have this pattern, right? So in this case, like this. In this case, basically, there's also a good chance once this pink line breaks, actually that's a breakout to the downside. So it's going to be important to keep an eye on both levels. The resistance zone, I mean, this could still be a bouncing spot basically to challenge 117, or this eventually could become a breakout to the downside once price goes below pink. So that's why it's important to see the channel to the downside, but realize that price could still turn here. Actually, just correct up to this level right here. Make a head and shoulders pattern and turn. That would not surprise me. Something like this. Do you see that? Like that. A reversal pattern like that, I think could be very likely because it is a heavy resistance zone. It seems pretty symmetric, this left head and the left shoulder and the head. So I think that typically a trend like this does get retraced a bit, right, before it falls and breaks. You can see a 61.8 fib right there as well. So I think that if price does make a rally at 111.25 and bounces up that trend line, it could rally up to 114.25 and then turn around here because of that head and shoulders and then start to break. So let's see if that happens, but that's just a heads up already. Alrighty, folks. So that was a lot of pattern talk on just one currency. But any questions on that? Anything you want to ask? If so, you have the chat available, and just let me know. All right, regarding cable, I am going to let you take a look yourself because I'm scared that you're going to fall asleep if I continue like this. There's a lot of patterns, but I want you to hunt yourself. So take a look at the cable and let me know which time frame has which pattern. All right, so let's see what you come up with. And I just spontaneously did this. I didn't think about anything beforehand. So if you don't find anything, that's possible. All right. But in the meantime, let's take a look at the pound, dollar, yen. Hope you can multitask at the same time when you're looking for those patterns on the pound. The dollar yen bounced off a 38.2 fib right here. So it's being squeezed between basically this 38.2 fib and this resistance right in here. These purple lines, all right, the pink line. So this one is broken already. All right, so that's a crucial question: how price will respond to that resistance zone. Will it break it? Will it, how is it going to respond? And how is it going to get up there? Now, at this moment, it could be an ABC pattern, for instance, or it could be a 1, 2, 3, 4, 5 pattern, wave pattern, that is. So from my perspective, it's going to be interesting to see if price basically bounces off this 38.2 fib, or will price break it and then start heading towards the 50 fib? Will it bounce at the 50? If it breaks the 50, it's actually probably an ABC pattern. The 50 fib is, from my perspective, the turning spot here. If it doesn't turn there or at the 38, then this is probably an ABC pattern and not a 1, 2, 3, 4, 5 pattern. All right. So from that perspective, 50 fib is vital. If it breaks above if it bounces at these fibs, these two, then there's a good chance for price to rally up to the minus 272 target and the resistance zone. In that case, I've become bullish. If we see 5 waves like that, we'll probably see an ABC pattern to the downside, and price will retrace deeply, probably down to the 61.8 most likely, and then bounce there for a significant rally. So it's an interesting spot. It all depends basically if price makes it like this and does like this and goes like this, right? This bounce basically is then a 38.2 rally, and this could go pretty far. This could at least test these tops again. So that's the question. Is this basically a small bounce at the 38.2 fib, and is this just a bit of a correction for price to fall down to the 50? Or is this the start of a significant rally after which we get a bit of a correction and then an upside? So I'm monitoring the lower time frames to see which of these two scenarios is more likely, because with Fibonacci levels, you see different patterns. You see price respecting the fibs, but not necessarily bouncing very strongly at these fibs. It could be just a small bounce. It could be a big bounce. It could be a massive turn. So we never know which one will be the turning spot. Which fib will price use? We can make an estimate. We know through wave patterns that some fibs are more likely. Like a wave 2 is deep, a wave 4 is shallow, right? But in some cases, it's not always as easy to predict, or it's actually quite difficult sometimes. So we have to monitor all of them. We have to kind of take in new information to see which is more likely. So is this a small correction for more downside to the 50 fib, or is this a start of a rally up to retest this resistance stop? And partially that answer lies on wave patterns. How is price making this upside? If it's a clear ABC zigzag, that's a factor, that's a signal, an extra confirmation that it's probably an ABC correction for more downside. But if price is making a 1, 2, 3, 4, 5, then that's probably a wave 1 or A at the least. So we would expect an ABC for B or 2, and then we should expect a bounce for that 3 or C, which means it became a bullish pattern, right? So that's why it's an interesting to see what's going on. So at the moment, I'm bullish on the dollar yen, and I'm expecting a bounce either here or at the 50 fib. So from my perspective, I don't like using stop losses below the 50, like below a 50 fib, but in this case, it makes sense. It's my validation level, 108.40-ish, right? Should be okay, and target at 111.70. There's about 240 pips there versus about a 90 risk, 240. Compared to 90, well, that is more than 2, we know for sure, right? It's about 2.67 R2R. So 2.67 units of reward versus 1 unit of risk. All right, that's okay. Now, is there any reason to see a turn right now? Well, to be honest, not that much. We see bearish candles. So it might not be the best time to take a long right now. 1 hour, we see a bit of a bounce. That could be a better reason. We do see that this trend line is broken. So the counter momentum is perhaps over. So that trend line break says something. Now, it is a triangle at this moment as well. A smaller triangle. This is not an hourly. Perhaps this is a 15-minute triangle at best. All right, so 15-minute candle above this trend line. That's the break of the pattern, and I would have to zoom into the 5-minute chart in that case, all right, to look for a bull flag, and a break of that bull flag is a continuation. That could be another way to trade it besides this fib, is basically the break, pullback, continue. And that's the break of a 50-minute triangle. So it would basically be a 38.2 fib bounce, which caused the triangle, the break of the triangle, the pullback, and then the continuation. All right, no one had any patterns on the pound USD. So that's possible. I'm not sure. Let's check. Are there any patterns to be seen? Alrighty. All right, now we have a zigzag pattern. Okay, that's not your most typical pattern perhaps, so that's okay. And you can see that price hit the 50 fib and went down to the 272 target, right? That's bouncing off that 272 target and has done so for a while. Let's go to the daily. Here's a zigzag pattern as well. And that looks corrective. So there's a good chance let's see, like that. All right, let me make that orange. There we go. Long-term trend line resistance. Price is at long-term moving average. Price made an ABC zigzag. So there's a good chance that this is basically completed right here, and price could make some downside here. All right, now the confirmation of that is we basically have a triangle on this daily chart. So I'm not sure how many of you tried, but I would say this is a pattern. It's a triangle, I would say, on the daily chart. Do you agree? What else do we see maybe on the daily chart? Do we see any other patterns besides this triangle? Okay, I'm drawing a fib here just to give you a bit of help. Price has stayed below the 50 fib. All right, we got a bit of a shy audience today. Anyone who sees a different pattern? Yes, no. Y for yes and for no. And that's why pattern trading is important, because if it takes more than 15 seconds, then you probably need to practice it a bit more, because it shouldn't take too long to recognize it, right? If it takes too long, then that's okay. There's nothing wrong with that. It's just that you might need a bit more training. It could be good to train that pattern recognition skills, right? It's like anything. It's like learning to play a music instrument. It just takes time and practice. Patterns are the same. The more we practice, the easier we'll see them, the more we'll be able to recognize it, know what to do, trade them, etc. So besides, and these lines might be confusing you, right? Because now you see that triangle, you might not see anything but that triangle, all right? But there's still something else that is potentially there to discuss. What do you think? Anyone? Does anyone see any patterns here? And of course, you cannot draw yourself. I realize that it's always easier. But Edith says a flag. All right. So, do you think that Edith means a bear flag or a bull flag? Let's see. What do you think? Bear or bull flag? I actually see about two patterns, a third one that has already been broken. Why? I see a fourth one already. That was another one that was broken. So there are a lot of patterns here you can name. Edith says a flag. No one wants to confirm if it's a bear or bull flag. All right. Well, I guess we got a really shy audience today. It is a bear flag, folks, and you got to see that. I mean, you got to really learn that. Uh, Challenge patterns are really very important, in my opinion, for forex trading. And Edith was spot on. Look at that. Right? Very simple. Just add a line right there, connect the tops, and you got a bear flag. Now, this is a daily chart, so I realize, this could be seen as a channel to the upside as well. But on a weekly chart, let's say, it could easily be seen. I think it's more daily. It is a channel and a flag. As long as price does not break the 50 fib, I would consider it still a bear flag. Right? And you can see it on the 4-hour chart. No, that's too low. But the daily chart, you can see that very nicely. You got a weak angle of that flag. So this is a bear flag. You got momentum prior to it, and you got a weak angle channel that doesn't break the 50 fib like that. That's definitely a bear flag. Great job, Edith. So that's one. But we got a triangle too, because we got a resistance line like this and a support line like that. So we can consider that too a triangle. Now, this is a downtrend channel line, right? So I like to look at patterns that are slightly smaller, perhaps, but okay. Another pattern that was here, that was already broken, by the way, but okay. Inverted head and shoulders here. Right, look at that. And that inverted shoulders was already broken, head and shoulders, sorry, when this trend line broke. And that was also a triangle at that time. That triangle, let's make it pink here. Those two pink lines broke, and you can see that the rally after that brought price up to around that 38.2 fib zone. So there was a space right in here, and it fulfilled that space, went actually a bit above it, and then found exhaustion. So those are old patterns, right? This is old inverted head and shoulders. This was an old triangle. Well, here we had some patterns too. We had a descending wedge like that. Bottom, top, and it broke, and we got momentum to the downside. So that was another old pattern right there. Let's see if we can find other patterns. Maybe a head and shoulders here. A bit funky looking one, but okay. Here we had an ABC zigzag pattern, as you can see, like this, right here. Here too. This might be a bull flag. It looks more like an ABC zigzag actually, too, as well. Here too. Here too. A lot of ABC zigzags, as you can see. Even this one could be one, right? A bigger one even. Here we have the red circle. There, that's a small pullback. That could have been a bull flag, maybe on an hourly chart, for instance, right? We wouldn't see that clearly here because it's too small. Even here, we had a triangle. Now I know that these are too many patterns to all write down. And sometimes the break doesn't go anywhere. This was a break to the upside, but it just marginally went up before it kind of like had weakness and started to move down. So not always the pattern break leads to a phenomenal breakout. It could just be a small push, and it might, not be. This was not a false break. I wouldn't say it's a false break because it moved up for a few pips, but it was just a move up to resistance, and it couldn't break resistance. So however you want to call it, it was just a small push. All right, I think most have been covered now. So what's the target of this? Well, once this bear flag breaks, the target, in my view, is the minus 272 target at 133. But the first target is always the bottom, right? And then after that, the 272 target. We can always look at higher time frames too, of course, to see if there's any support or resistance from that time frame. And we see one here where there's a big bottom at 135, apparently. $135. All right, so 135, we have to be aware of that. That could be, of course, a big bouncing spot. It's a psychological level as well. So let's zoom in. We looked at the daily now. All right. You see a zigzag pattern here. Probably that's a zigzag. Now I say probably. Why? Because one could see 5 waves in this piece. So that makes me less certain just because of this information right there. But it could easily be a zigzag like that as well. So I'm not 100% certain about that. But if this is a zigzag, that would mean that this was a deep correction. And you can see it went up to the 78.6 fib. That could be a turnaround, and we could be in a downtrend in this case. Okay, this could be the start of a downtrend. This could be the correction of the start, and this could be the follow through. If this were to happen, price really needs to break this green line. It needs to break this bottom, and it has to break out like that. All right, down to the hourly. We had some patterns here as well. We had a inverted head and shoulders. No, sorry, we had a head and shoulders here. That head and shoulders broke. On my wave analysis last week, I had this triangle here. That triangle broke. Then we had a small pattern. Let's take a look at that. This is a 15-minute triangle. All right, so if it breaks to the downside, it's probably head and shoulders. If it breaks to the upside, it's a trend continuation. So once this 15-minute candle here, right, had a close near the low and broke through the trend line clearly. You see that? That is the signal of a triangle break on the 50-minute chart. All right, so that's the signal. Then I'm looking for the pattern after the pattern, right? So I go to the 5-minute chart. So what pattern do we see here? I'm looking for a bull flag. I'm looking for a sideways zone. And basically what we see is a sideways zone. Price is consolidating like this. So once you see a sideways zone like that, I mean, it's possible to take shorts in here. If you're a bit more patient, then perhaps somewhere in here, or even the break. And if you put a fib on this swing high, we wouldn't expect necessarily a break above the 50. That could be a good entry spot. Stop loss still above here though, just in case. And that was a good short. That was the pattern after the pattern. All right, so that was up in here. Just to give you an example. That was a triangle break up in here. In the meantime, let me get rid of all this. So in the meantime, we had some breaks after that. We had this triangle break right there. I had a shoulders break. We had here a small triangle break. Then we had this trend line break as well. And that was yesterday. I said in my weekly video, look for a pullback to the 50 fib, I think it was, or did I say the 38.2 fib? I think it was the 38.2 fib, sorry. Look for a pullback into this zone, into the fib, for a turnaround, and a move down to the target, right? So that happened yesterday. Now at this moment, it seems like we completed 5 waves. We completed a 5-wave pattern here. You can see that pretty clearly, pretty easily, right? You don't have to be a wave expert to see 5 waves down like that. So once that happened, we might expect now an ABC zigzag correction. And so from that point of view, once this trend line breaks, it could be a reversal trade to the upside. So let's put a fib now from this entire downside here, like this. All right, so once this trend line breaks, there could be a reversal trade, an hourly candle that pushes above it with a strong close, and then a 50-minute bull flag could warrant a reversal trade up to the 50 fib, or the 61, or the 78.6 fib. Not sure how far it will go, but those would be the targets. More interesting for me, though, would be a turnaround at these fibs and looking for shorts at that level. Because a short there, I think, has more potential. If this is a hook back, if this is a downside, a hook back, and this is a hook back again, then the fall could at least bring price down to $142.20, $142 at the very minimum, I would say. Well, the very minimum is always a bottom, of course, support, but once the minimum target, let me say this way, I would think is this. It could even go further than that, but that all depends on other like higher time frame factors. As I said, this is still a bear flag. The bear flag hasn't broken yet. So the point is that as price gets down to 143, 142, it is bumping into that bear flag, the bottom of the bear flag. So that depends how price will respond here. Will it bounce? Then this could still be an ABC zigzag. You see that? So that's something, but obviously there's a lot of space from here down to here or here. There's a lot of space. So there's more space to the downside, I think, than space to the upside at this moment. Right? There's a bit of space here, and that could be worth trading, but you're quickly running into something that could do this. So there is a reversal trade here potentially, but the more interesting trade, I think, is from resistance down to support. So let's see how this hourly candle looks like. And my wave analysis, hopefully it's ready by now. You already see that I was hinting to that pattern. Sorry about that. All right, well, anyhow, just take a look at iPhonemarkets.com, click on analytics, go to wave analysis, and you'll find today's wave analysis. And I had on the chart A, B, C. Now, I wasn't 100% sure, of course. I did also mention that if it breaks this bottom, then there could be an extension of this momentum, right? Because this isn't a downtrend channel. Let's face it. This is channeling down like this, right? It's not only channeling down, it bounced off strong resistance, head and shoulders, broke triangles and bear flags. So there's a lot of reason to be bearish. Yet I still marked it as ABC, and I said, why? Because of wave analysis. So if you didn't do wave analysis, this might come as a surprise. If you do, then it's not that surprising, as long as it stays above this bottom. Because if it breaks that bottom, I also realized that there could be, of course, an extension lower within this channel. All right. So it seems like that's happening. Let's see, at the top of the hour, this candle will close. I would like to see it close near the high, and then I would like to zoom into lower time frames like the 5 or 15, and wait for a bull flag or some kind of correction pattern. Bull flag, triangle, contracting triangle, even a zigzag. Probably not going to happen though, or a inverted head and shoulders like that on the lower time frame. At the moment, that does not maybe seem that likely, but those are just, in a way, a bit of emotions playing on us. The thing is, once we see these big bars, right, we think it's going to continue forever like that. Don't forget that despite the breakout here, it's all still, from a hourly and 4-hour perspective, that upside is a counter trend trade, right? Why? Because we have a lower high here. You might counter that with, we have higher lows here. So at best, it's a triangle, right? And it's a breakout where the resistance of the triangle is pretty close. And it's certainly not an uptrend. So it's not as great, this breakout to the upside. I would not like to trade it immediately, personally. I'd rather wait for an hourly candle close. This 38.2 fib, right, could also easily turn price and make it retrace a bit before there could be that bigger bounce. All right, so we really talked long about the three majors. Is there any pair that you would like to take a look at? On my list today was this Euro odd. Basically it had a rising wedge here. That rising wedge broke with the ABC zigzag. You can see that a bit better here, right? And started to rally, and it wasn't able really to go much further than that. Wait, wow. There we go. All right. And it started to kind of make this a bit of a triangle or an ascending wedge like that. There we go. So that's the consolidation. This is basically price showing a lot of upside momentum and then going sideways. And if you look at how shallow it retraced it, if we put a fib from here to here, You see, it didn't even went back to the 23.6 fib. Even if we use this swing high, swing low, you can see it stayed at the 23.6 fib. Very, very shallow, right? So once it breaks, that's a good continuation breakout. There was a good hourly candle here if we use this line. So this is a good hourly pattern, I would say. It fits within the hourly chart. So the candle here, that's a good breakout candle 4 hours ago. And if we then zoom in to the 5 or 15, we're looking for consolidation after the pattern after the pattern, remember. And what do we get? We get a good bull flag. Bull flag after the triangle break. So once again, 1 hour triangle, 1 hour candle above the triangle, 5-minute bull flag, right? And then we get the break of the bull flag. So that could have been an entry at, the bull flag itself, or the break of the bull flag. Actually, we get a 1-minute bull flag after the 5-minute bull flag. This is 5-minute bull flag. This looks like a 1-minute bull flag. All right. Now at this moment, trying to see if there's probably a good chance of continuation. Let me check. Let me check where the pivot points are, but I would think that this is still a decent support level right in here. It seems like we're making a zigzag correction. It would be nice if price could get just a tad lower, perhaps. Oops. Perhaps in this purple box right here, around 156, 155.90. Let me see where the pivot points are. You see, the reason why I'm careful at this point is that the breakout has happened. Price has reached the target already. So we're not sure how this is going to respond. There's a bit of divergence between these tops. So there could be a bigger zigzag, all right? Or that could be it. There could be, maybe this could be it to the upside. You want to be careful of that. So I would like price to make kind of like a zigzag like this down to the 61.8 target. And if I see a bounce there, I think it could still be interesting. But right here, I think it's too close to the target. And it might continue, but I don't think it's worth that risk. But I just wanted to show you something that was on my list from today. And you can see exactly the same things occurring. The 1 hour triangle, the 5-minute, the 1 hour triangle, the 1 hour break, the 5-minute bull flag, the break of the 5-minute bull flag, the 1-minute bull flag, the break of the 1-minute bull flag. And I'm not saying I'm trading that 1 minute bull flag, but I'm just trying to show how the market is a fractal nature. You have these patterns that are repeating and repeating on all these different time frames. And the very, very small ones is difficult to trade. 1-minute chart patterns, I never did it because you got spread to account with and targets are small. So the costs are going to be very costly, right? So that makes it less attractive. Now, others on my list, I don't see any preference from you at the moment. If you do, by all means, let me know. I was actually, when looking at the market, I saw a good trend on the pound New Zealand, and it's still continuing. But this is one of those where there is no pattern. I mean, there was a pattern here, way back. Well, it's not that back, but in the Asian session today. But there hasn't been a pattern yet. It's on my list if it makes a pattern. I would like to see a pattern. This was a channel. I was actually hoping maybe it could correct lower and then bounce, but it seems to be breaking that channel at this moment. And there's really, on the lower time frame, there's nothing of a pattern at the moment. So, that can happen. The pound, it's a good uptrend though. It's a good trending mode. Pound odd 2. So we see pound dollar pushing the pound odd and pound New Zealand. And those were on my list to discuss regarding upside, but there's really nothing at this moment. This was a good 5-minute bull flag. You can see that triangle. You can see that pretty clearly, right? But once you see a 5-minute bull flag, I'm, by the way, not waiting for the pattern of the pattern. All right, I'm not going to dive into the 1-minute chart to look for the pattern after that pattern. It would have worked, by the way, but that's not something I normally do. You got another flag here, as you can see. Well, yeah, right? But at this moment, this is a runaway currency pair, so there's nothing we can really do that much. Earlier today, one could have seen this break. That was a 30-minute break. And you can see this candle clearly marking the break right here. So if we wait for the pattern after that pattern, that would be this 5-minute bull flag, right? So this is the 30-minute pattern break on the pound odd, and this is the bull flag after that break. So this is a good trade, either upon a pending order upon the break of these tops, or upon the 5-minute. That's already a big 5-minute candle. It would be a shame, but that could be another entry. Right there, or somewhere here at support. All right, we had I would say this is a 30-minute trendline break. I don't think we had a really a significant pullback on this Kiwi, so I think it still retrace potentially. If it does retrace, I think it could still be an interesting. If it makes some kind of bull flag like a bear flag on a 50-minute chart, I think it could be an interesting retracement after this break here. And last but not least, the Euro Yen. Triangle right there on hourly. Okay, so let's go to the 15. And this is really the first kind of consolidation after that break, as you can see. So that to me looks bearish. And if price gets up to the 38.2 fib, I think that could be interesting to look for a turnaround or break of this this flag. Those could all be potential downside trades. With 182, 121.75 as the target. Why? Because here we see big support levels as well. All right, dollar yen is breaking to the upside, is bouncing off the 38.2 fib. That seemed likely, and this is the first break on the 50-minute chart. So on the 5-minute chart, I would like to see a consolidation pattern like that, and that would be my signal for a long on the dollar yen. Pound USD, same thing. That's becoming a clear break. Well, could even use this 30-minute chart perhaps. So that could be an upside trade, and on the euro, we actually see the opposite. And here I'm going to keep an eye on this hourly candle. So hourly on the euro dollar, pound dollar 5-minute chart, I'm keeping an eye on. Dollar yen now 5-minute, waiting for flags on the pound, dollar yen, waiting for a good breakout candle on the euro, and then a flag on the euro dollar. I'm looking for a retracement on the euro yen to the 38.2 fib. But if the dollar yen is up and euro dollar down, it might be better to skip the euro yen. But I mean, strictly speaking, if this is a break, I'm looking for the first pattern, so that it meets what I'm looking for. Pound New Zealand, pound out, I think were good trades earlier today. Now I think they've just gone too far. I think that they could still keep pushing. If you're in that trade, great. Just keep moving that drill stop at appropriate spots. Keep moving it where you think makes sense for your psychology point of view, that you don't get too nervous, that you lock in enough profit, but maybe still give some space. But otherwise, I think these have gone so far that these have left the train station. I don't think they're going back. All right, I just think not going to happen today. All right. So, any questions you have on the pattern trading that we've talked about now, patterns in general, today's market in general? Is there something you still want to take a look at? I'll give the balls now in your court. So let me know. In the meantime, I'm going to show you two things. I want to show you silver. That seems to be, take a look at silver together. That seems to be basically breaking a bit down the downside. We have had a head and shoulders, and it seems like this support level broke, and now it's even below the 50 fib. So there was a channel, of course, like this. Could still be in that channel, but point is that it broke the 38.2 fib, and look after the break of the 38 how it nicely fell to the 50, and now it's below the 50. So that seems to be a bit of a bearishness there. Same for gold. Nothing new on the indices, I think. The second thing I wanted to show you is that tomorrow we'll take a look at strategy. We're going to take a look at the fibs in combination with the alligator. Alligator is an indicator from Bill Williams, which you can find on any MT4 platform. And we're going to combine that, and that's the strategy focus of tomorrow. So you can just easily do that by going to insert, indicators, insert, Bill Williams, alligator. Derek is asking dollar CAD. He sees a pattern on it and wants to confirm it with me. Great stuff. Happy to hear that. Let's put everything off and take a look right now. So 1 hour chart. Alrighty. So we got a clear support level here indeed. There we go. Connecting multiple bottoms. There's some trend lines here. They're not relevant for now, though, at this moment. We had a resistance level like this coming in, but the resistance was a tad upsloped. All right, so this is a bit like a rising wedge versus ascending wedge. If it were flat, if this line were flat, it would be an ascending wedge. If it rises like this a bit, it's actually a slight rising wedge. Now, rising wedges look a bit different normally. They look more like this, to be honest. Right? So I wouldn't consider this really a rising wedge, and more of an ascending wedge. So it's not a perfect ascending wedge because the perfect one would be flat. But because it's so mildly sloped, I would consider that to be closer to an ascending wedge than a rising wedge indeed. But you can see why I'm referring to both, because it kind of has characteristics of both patterns. Now, also important to note is that however we put the fib on, it had a very shallow retracement. There we go, 23.6 fib. So that does look like a breakout to the upside on this dollar CAD, and I think that there's a good chance of price continuing to the upside. If I use my Fibonacci targets, script, we see that price is at 1, 2, 3, 4, past the fourth level. So it has a good chance of going to the fifth. So there is a good space here, I would say. So has the pattern broken? That's the next question. Let's take a look. This is a 30-minute pattern, I would say, or an hourly. Both have good candles above that line, as you can see. So zooming into the 5-minute chart, we get to see a bull flag. Now price already actually made a kind of a correction here. It was a very short one. It would be nice to see perhaps at this point price bounce here, make it one more time down to here, and there could be perhaps a small inverted head and shoulders. Very small one. You see that? Will it happen? I don't know, but I'm just saying if it happens, that could be interesting. 130, 170-ish. Now, a trade like that, where would I put the stop loss? I think 131.45 probably enough. 134, 47 maybe even, 45. It's a tight stop loss, I know, and that's always risky. It's just below these bottoms. But the point is that either it's breaking now. If it goes that deep, then, well, maybe even, it depends. Safer could be below this trend line and these bottoms right here, right? But point is that a relative tight one, I think, does make sense because of the fact that it should be breaking now. And if it fails, then I don't want to stay in too long because that could actually, there's a good space down here too. It could be a big retracement if it fails. Doesn't seem like it's going to fail, but if it does, that could be a big retracement. At this moment, it looks like a good breakout to me. It looks like I see the things that I want to see. I see that it's pushing beyond the fourth level of the Fibonacci tool. It's breaking this pattern. It looks good. The only thing is, as I said, it's that it's kind of this has been corrective so far, but it doesn't mean that the break of this correction zone is not good. All right, Eurodollar. Well, not a bad close. It's not a great close. It's okay. There's a bit of wick. Could have been a bit better. It would have been better if it were somewhere here. This is a tad away from it, but I still think it's okayish. The break of the trend line is a bit doubtful because the trend line itself is kind of cutting through the candle, and what I like to see is a majority of the candle below the breakout. Well, in this case, we don't have it, so the candle close is okay. It's acceptable, but the candle itself, 20 pips above it, 13 pips below it, that does not seem enough to me. Plus, we got a bounce off this blue line. I would not, at this moment, be looking for short. I think it's too little evidence for a good breakout. Now, it might break, I'm not saying, but this is just, how I look at probability at this moment. It's just not enough for me. But it could be good. Obviously, there's always, if you filter out a trade, there's always the risk that it's good or bad, and you just never know. 5-minute chart, you see price reacting. It really went up a lot. It went up to the 50 fib in one shot. Wow. All right. So what I'll be looking for is retracement of that candle on a 5-minute chart. Hopefully I'll get it. If not, then what can I do? I missed this reversal trade, but not the end of the world. Dollar yen. Let's take a look. This has a good candle close near the high and has a majority of the candle above the trend line. So I think that's a good break too, and I think it's worth taking a look at the 5-minute chart for a pattern after the pattern. Let's see if we get it. And if we don't, and pound dollar just keeps pushing, then I would like to see also, I would be interested in seeing if there's any reaction here. That could be an interesting resistance zone somewhere around 146. That could be a good bounce spot. But I am going to keep an eye on price, how it responds there, right? I'm not just going to jump in a pending order because we never know. This breakout could push more than we expect. Actually, on the dollar yen, it might be even worth taking a long actually right now, even without waiting for the 5-minute pattern, because this has a lot of space potential. The pound dollar doesn't. The pound dollar is capped by strong resistance. Not worth taking it on the hourly chart. The dollar yen, there's a difference between dollar yen and pound dollar because the dollar yen has a lot of space. The dollar yen actually is bouncing off of 38.2 fib. Could go up to this target. So there's a decent space available there, I think. Makes it worth either trading this 4-hour candle once it closes, or the retracement of the 4-hour candle, or this hourly break, or the 5-minute pattern. And that could be higher. The 5-minute pattern could be, it could take, first price might go up to 110. Then you get the 5-minute bull flag, and then the follow through. That might take a while. You never know, right? It could go up like this, and then we get the bull flag. Sorry, that depends on how much momentum this has to push. Well, I guess that's it. You can always write me, of course, an email, and if you have any questions, you can voice your thoughts like that. Just write to this email address right here. As I'm writing, you can see it hopefully now a bit better. There we go. Feel free to ask any questions regarding patterns or fibs or anything technical. Obviously, today, of course, we were focusing on patterns. There you go. With that said, I hope to see you in. Oh, we're getting really pushed through here. Eurodollar continuing. Dollar yen pound is stopping there a bit. Well, yeah, we'll see how those patterns work out. And we can talk about that quickly tomorrow as well. Tomorrow we'll talk about how those patterns developed today, throughout the trading day, but also about, as I said, fibs and the alligator. And hope to see you in other webinars. We got analytics, of course, Nenet with his technicals and traders blog. A lot of things to discover here. So hope to see you on the website. Good trading and talk to you soon. Cheers.